My people, my people. 100 Years of Wealth, streamhomeloan.com. This is Kenneth here. Happy to have you back in the building. Thanks for tapping back in. Let's go ahead and dive in. Topic of today, we're going to be discussing mortgage. We're going to do a deep dive over the next, coming videos where I go further into different aspects of the mortgage industry so I can make my viewers more informed for the aspect of possibly purchasing a property, using a mortgage for that, possibly refinancing your home that you currently already have, or possibly joining our industry as a loan officer or maybe a loan broker, depending on where you're starting at. Let's start off with the crux of the conversation. The main thing that we're focused on here in my industry, obviously, is mortgage loans. As a mortgage loan originator or mortgage loan broker, what we're doing is helping individuals, consumers that are purchasing usually residential property, and we're helping them finance that property. In refinance situations, we are helping them refinance that property because they already own the property, they already have a loan against it, and they're looking for different terms, whether the terms they want to better the terms by lowering the interest rate, or adjust the terms by maybe increasing the loan amount to access some of the equity that their property's gained. A mortgage is the tool that we use. And by definition, what a mortgage is a loan, or a mortgage loan, or simply a mortgage in civil law jurisdictions known as a hypothec loan, is a loan used either by purchasers of real property to raise funds to buy real estate, or by existing property owners to raise funds for any purpose while putting a lien on the property being mortgaged, right? So, you could even think of a person that already has a home, already has a loan, and then they go out and take out a second mortgage, borrow an additional amount on top of the current loan that they have, or aside of the loan that they already have, um, and that would be also a mortgage known as a second mortgage. So basically, whenever you are borrowing money against a real property, a real piece of property, it will be known as a mortgage. So in our industry, in my industry, I am a mortgage loan broker. I'm the owner operator of streamhomeloan.com. We house independent mortgage loan originators, and these individuals are licensed under the NMLS, National Mortgage Licensing System, and then they're further licensed. The license is under a state entity, and then it's handled by the NMLS. If you have questions about that, you can reach out to me. But what we do is we help clients secure loans to purchase properties, as mentioned in the definition there. And to kind of like create like a better visual for it, it's really a client that is, obviously looking to purchase a property and taking their terms of who they are, and as far as their financial scenario, their credit, their income, their assets, employment history, things like that, employment type, and they're taking that to a lender and saying, hey, I would like to purchase this property. Here are my stats, my statistics, my qualifying factors. Um, what terms will you give me so I can go and purchase this property, right? So a lot of times there's scenarios that people are fitting into that are kind of your traditional cookie cutter loan type scenarios, whether it's someone's putting 20% down and financing 80% of the property, or the property's purchase price, and they have a W-2 job and excellent credit. That might be considered a more traditional scenario. And then you have scenarios where maybe a person is self-employed and they have assets because they've maybe saved their money and they make a strong amount of income, but then they don't show a lot of income on their tax return. So they, meaning that they write off a lot of their expenses. So their on paper income ends up showing a lot less than what they actually bring in and what they actually might be able to afford. So then you end up having that person seeking out I guess you could say, a non-traditional type loan. Depending on what time, or what time frame we are in the industry, what's going on, lenders are more flexible when rates are really good. When rates tighten up, lenders tighten up. So at one point in the industry, you might have more options for a client that has non-traditional income, that has maybe a self-employed situation where they write off a lot of their income, and that might fall into a a non-QM type loan scenario, or what they would consider alternative type loan scenario. And then there are other times where, the industry might be in a more flexible state because rates and things like that. And you have your traditional lenders that are willing to offer more flexibility for clients like that. So, generally speaking, the vast majority of homeowners in America use mortgages to purchase homes because the reality of it is that the purchase price of homes are just far beyond most people's cash access, right? In California, the average purchase price, it varies from place to place, but I'm gonna pull it up as we're speaking. But I would say, somewhere in the six or $700,000 range for homes in Southern California. Let me take that back. It says $884,000 is the average purchase price for homes in Southern California. So if we narrow it down and we say all of California, that might adjust. Obviously, it should adjust because Southern California is more of a higher priced area, but I know Central Valley prices have continued to tick up. The Bay Area prices are high, so it's really kind of hard to say. But the reality of it is that most people aren't going to have cash to purchase a home that's at $884,000. So what they're going to do is they're going to finance a large portion of that and put down a small portion of money as a down payment, um, and then get into their home and make a monthly mortgage payment. So, you know, without diving too far into specific loan programs that are available, because they do vary, they do change from time to time. Once again, depending on the industries, current flexibility, rates, things like that, rates, restrictions, all that. Um, the widely used loan programs right now, or the most widely used loan programs right now, are going to be conventional loan programs and FHA loan programs, right? These are government backed or government insured mortgage loan programs where basically lenders will lend to a certain set of guidelines under the idea that they can sell these loans to secondary lenders that purchase these types of loans that adhere to certain guidelines, right? So a simple scenario might be something like on an FHA loan. FHA will let you go up to a 96.5% purchase or loan to value, requiring the buyer to only put down 3.5% of their own funds as a down payment. And I think the credit score requirement for FHA is only 580. FHA, or to go up to 96.5% on an FHA loan, they only require a 580 FICO score. If you were looking to, if you had a lower credit score, I think all the way down to 500, then you have to put down at least 10%, if I remember correctly. But FHA is very flexible. You would just need to be able to document your income and show that your income can support your monthly expenses, and which is reflected in a certain debt to income ratio, basically the comparison of your debt and your monthly expenses, including your new housing expense versus what your income is. And we'll dive into that, and we'll go into the specifics on programs going forward. But with that being said, just in that scenario, FHA requiring someone to put down 3.5%, there are also options for that 3.5% to be provided through what's called down payment assistance, right? So a mortgage is, like we mentioned, it's something that is used to purchase a secure piece of property. But outside of that, it's a vast, or it's it's a very flexible type of loan because you have different types of entities, lenders, different types of entities and lenders that are distributing this loan and coming up with their own guidelines and their own risk parameters. So it makes it to where it's not so cut and dry, where you can just say, hey, if you have this credit score or this credit score, a loan will work. Me being a mortgage broker, having access to hundreds of different lenders in our industry, you're able to see all the different things that are out there that different lenders have to offer, and it really comes down to having someone experienced like myself that can find the right program that fits for the right client or fits the client. And for the most part, you can find a program that will work. Obviously, there needs to be an ability to repay the loan, needs to be some assets, needs to be some documented income if there aren't super strong assets. But main point of this video is just to give you a verbal of what a mortgage is. Also, for anyone that's watching this, to let you know that you can qualify for a home loan from credit scores from 500 and up. Now, the lower you go with the credit score, obviously pricing, interest rates, things like that are affected. But it's all about what's affordable for yourself. So I want people to know what the options are for them, and I want them to understand the benefit of getting into a home. And not to say that that's the be all end all to investing, but I think for most people, it is a way that they've been able to build some sort of additional wealth or access cash that they may not have been able to access if they had not owned a home, as well as having write-offs that they wouldn't have had if they did not own a home, as well as having stability in your monthly expense. When you own a home versus renting, for the most part, the loans that are being funded and distributed currently are they are fixed rate loans, meaning that your payment once you close your loan, and once you close that loan, it's a fixed rate, so you're not going to have monthly payment adjustments. Last time I was renting, well, I would say the 10 years prior to purchasing my home that I was renting, every single year my rent went up. Understandably, the expenses of a landlord are going up as well. So point is that it's multi-factored when you purchase a home. It creates stability in your monthly expense. It gives you the ability to build equity. It's kind of like a built-in savings account because you are paying down a balance that usually at the same time you're seeing equity growth as well. But there's a lot of different benefits from it. Pros and cons, of course. Everyone has their own perspective on that. But I'm here coming from the perspective of thinking that, hey, I think for the most part, unless you have a some sort of counter argument where you should be putting your money instead of purchasing a home, I would think it's a safe investment and a smart investment that is paid off for most people. So mortgage is that tool for most of us to get into that, and it's good to know what's out there, what your options are, because then that'll give you a better perspective of how to obtain what you want. I feel like for myself, being in the mortgage industry for now 20 years or so, I have obviously a good grasp on what programs are available. I'm aware of the new ones that are popping up, and the changes that have been made to programs in the past. But it does give me the feeling that, hey, like when I am ready to buy an investment property, I might not have W-2 income because I'm self-employed, but I know the program that'll work. And I'm like, okay, that program requires me to put this much down, and it requires me to show this much in rental income or whatever the scenario is. But having that perspective and understanding that gives me something to build to, and something, like a roadmap for what I need in order to make my next move and my next investment. So, hey, if you got any knowledge from this, like and subscribe. 100 years of wealth to you and yours. StreamHomeLoan.com. If you have any questions related to a mortgage, I'll hook you up with one of my licensed loan officers that can definitely help you out. Or if you have any questions directly for me, put it in the comments or email me at kenneth@streamhomeloan.com. Look forward to helping you. Have a great day. Cheers.